Hi, welcome to EQD Research Global Insights for Friday, May 21st. Going to start talking about the same thing everybody else talks about today, Bitcoin. Under a little bit of pressure based on news or rumors, however you look at it, about what's going on over in China. VIX is hovering around 20 with the S&P 500 up a bit and a NASDAQ 100 index option trade that is targeting a ceiling for the NASDAQ between now and Monday's close. But before I get going, as always, if you like what you hear, please hit that like button if you make it to the end. Feel free to subscribe, and if you want to be kept up with when these videos go live, hit that bell notification button below as well. So starting out with Bitcoin, last I checked, it was down around $2,000. It dumped about $4,000 very quickly on some news hitting the tape, but it has been under a bit of pressure today. One was that the government's going to crack down on trading and maybe cracking down a bit on the Bitcoin miners in China. And then the second rumor, which was attributed to sources, was that a whale out of China may be dumping 200,000 Bitcoin real quick. Quick math, that's about $7+ billion worth of Bitcoin that may be coming into the market, or somebody's trying to get out of. The recent correction was around 30%, and I've been running a few numbers using Bloomberg closing data. It's very difficult to really pin down what counts as Bitcoin data. So I just use the daily closing prices for Bitcoin because the Bloomberg does have it going all the way back to the launch of Bitcoin. Each of these, it represents 30% corrections in the price of Bitcoin. And then after that correction, how long did it take us to get back up to the previous all-time high? The early numbers on here, back in 2010 and 2011, Bitcoin was priced at a level that most people could buy one with the money they have in their wallet. Later on, we did start to have a higher price. So we may want to, it's kind of two different markets there with the early part and the later part of what's on this table. The more recent corrections, it took a little bit longer took a few bit more days or maybe even years for Bitcoin to recover to new highs. You can see, with one exception, back in 2017, it took months, if not years, for us to recover. Time will tell whether or not this correction indicates a new price range for Bitcoin for some time, or if we're going to run right back up to the mid 60,000 price level for Bitcoin. And just for information purposes, right now, the current drawdown from the highs around 40% or so. So based on history, there may be some more downside as well. Turning to the equity markets did not really react much when Bitcoin sold off. I think that's an anomaly relative to recent history, or at least some people were trying to attribute a sell-off in stocks to what was going on in the Bitcoin market. Whether that's accurate or not, I'll leave that up to pundits. However, the S&P 500, as I sit here, is up about 0.4%. VIX is down 68 cents to right at 20. The June contract is down 35 cents to 21.75, and the rest of the curve's down 25 to 35 cents, with the exception of that January contract way out there on the curve. This is probably one of the most parallel shifts I've ever seen in the VIX curve on a day-over-day basis. Now, at least one trader thinks they know where June VIX settlement's going to be, and that number is 18. A big put butterfly traded this morning with VIX at 2030 and the June future at 2180 using the June option contracts. Somebody sold 30,000 of the June 18 puts for 67 cents. Then they bought 15,000 of the 17 puts for 36 cents, and 15,000 of the 19 puts for $1.10. Net cost for each fly is 12 cents. That's the risk on this trade, and the potential return is 88 cents if they nail the prediction and hold it through settlement. So a very narrow range of profitability there, but pretty low dollar cost for this trade as well. Definitely a spread that I'll be keeping an eye on through now and June VIX settlement. Now, finally, turning to the NASDAQ 100, it's actually down about 0.5%, a big divergence there between the NASDAQ and the S&P 500. Vol-Q was actually down as well, down 43 cents to 21.16, even though the underlying index was down. I've been doing some summer performance analysis, and a bigger piece is going to go up on EQ derivatives this weekend, but I did notice that the NDX has been up. I'm looking at the sell in May and go away phrase, and if it's accurate or not. The NDX has been up 6 of the last 7 summers. But as I put the table together, and I was also comparing it to other indexes, I did note that the NASDAQ 100 has outperformed the S&P 500 all 7 of the last summers. As I mentioned, there'll be more information on this on the EQD website going up on Saturday morning, but there probably is something to do trading-wise if you if you think that's going to hold up relative to history. If you're bullish on stocks, you may want to turn to the NASDAQ 100 versus one of the other broad-based indexes, at least for the time period between Memorial Day and Labor Day. And then finally, an NDX trade, looking for the net index to close below 13,810, nice round number there, on Monday. With the index at 13,540 this morning, somebody sold the 13,810 calls for an average price of 580, and they went way up here, the 13,925 calls for 290. Credit of 290 on this trade, and there's a big risk dollar-wise because there's such a wide spread between the short call strike and the long call strike. However, just to hit that short call strike, the NASDAQ 100 needs to be 2% higher than where it was when the trade went off on Monday's close. So they've got a bit of a buffer and maybe some time to react if it looks like this trade is not going to work out. So as always, thanks for joining me for EQD Research Global Insights for Friday, May 21st. Looks like it's going to be a great weekend for everyone. If you've got any thoughts, feel free to use the space below to throw some suggestions in there. Suggestions often do turn into material for these videos, so I do pay attention to all of them. If you've stuck with me this far, you have to hit the like button. That's the rule. And if you've got something more in-depth you'd like to discuss with me market-wise or some suggestions for this video, feel free to use my email address, rhodes@eqderivatives.com.